guys, it's Mike with Vant Trading with your trade of the day. Today's trade of the day, I go over actually a couple trades. We kind of go over the shop setup. That was a great setup that we had as a group. Didn't spend much time on that, but mainly we go over our ES trade and how we used market internals to help us. Simon and a couple of the other mentorees had some of the same trades. We had a killer day today. Everybody was green. Everybody had good trades. So I'm very proud of them as a group, especially for a day that we thought was going to be a tough day trading the markets, with big players positioning before tomorrow's trading going into POW, ADP, JOLTS, and the rest. So enjoy these trades. I think you get really powerful lesson out of today's trade of the day. That's why it goes a little bit longer. We spend a little bit more time because, relationships, market internals, that's how you get yourself an edge in trading and be able to make some easy money in this business. All right, guys, I hope you enjoy this video. But what I really wanted to go over as the trade of the day today was the ES. Simon, did you take the ES?
Yes, sir. I shorted it.
Okay, you shorted it. I longed it. So two sides of the same coin. And I kind of want to go over through like the internal stuff as well, because, it's really important. So if you kind of look in here, first off, you can see just we're kind of in this little zone here. We had drawn these Fibonacci levels right here, as you can see on the daily chart, from the low to kind of this peak high in here. And then we kind of broke right back out from this retest. And you can see the 50, perfect right here. You had, nice dip buy, nice making a low, came back up, and then, retested the 50% retracement perfectly, went up, made new highs, right up to this expansion zone on the Fibonacci, right up to the 200. So just textbook technical trading here. And, obviously we talked about this morning that with what we have going on with the Fed, and we got Powell, Emperor Powell. It's going to be speaking tomorrow, and you got PCE, you got non-farm payrolls coming down the pipe. You got ADP in the morning, so you got a lot of stuff the traders are going to want to kind of just get prepared for. So you kind of had this kind of pinning action that you would typically get if you had a Fed meeting or if you had an options expiration. So definitely you can see here, made this low and this low kind of lining up in the same zone. So kind of had my targets lined up, and I want to show you the 15-minute first, because this is what I was looking at here. Obviously it was this area that we saw get traded yesterday. Okay, and this is the 15-minute. And, you guys know that I always trade with the 2-minute, 5-minute, 15-minute kind of sitting there. And this 15-minute really, it was a nice little setup. So you had this nice little look below. You printed the 15-minute low, which was nice. And then, which also was the initial bounce low. And then they kind of brought us right back up, and you got the nice expansion candle back up into this chop zone. And then, of course, they brought it back down, which was a good short. Is that what you caught, Simon?
Yeah, I took it up. You see that second 15-minute candle after the green?
Yes.
To the left?
Oh, to the left.
Sorry, after the big bar, the first red candle. That's what I meant.
Oh, the first one. Yeah.
Yeah,
right
somewhere in there I shorted.
Awesome. Did you hold here?
No, I did not. I held until the bottom of it looks like your red line, your 15-minute low. So I took it from.
Oh, you took it to the 15-minute low. That's a pretty nice, good trade, Simon. Good trade. Well, what I want to kind of show you guys, and let's kind of zoom in, and you can see what the 2 minutes looking like in the area that I was looking for on that dip buy. And I kind of been in the dip buy mode here, and I posted this one on Discord when the trade happened. And I kind of want to walk through why I was thinking and why I bought down here. Okay, because I actually bought it down in this area, not waiting for this breakout. And, within like 7 minutes, I had a nice little trade, and I got out of this first trade right here. The second trade was this retest here, which I took even further. And by the time I got this trade, which was the better trade, this was a nice, easy, quick trade. This trade, I shut it down. I was like, all right, I made enough money today on a day that was supposed to be whippy, and I didn't press my bets the rest of the day. But I want to bring up the market internal, the NASA terminal sheet here, if I can. And I don't know if you guys saw, did you see my post in the morning on Discord?
Yep.
Okay. Well, here, if you look at the tick, okay, if you look at the tick and you look at the volume, the up volume, and you can see the zero line here. I mean, from the open, okay, we really got going, okay, with higher lows, and we were hanging at the zero line. We had a nice little run, and you can see, you can kind of see what everything was kind of doing at the same time. Now, you did have rates pop up on the market open, but they were falling off. You also had the dollar, and let me kind of bring in the dollar here, that, ran up into the market open and then started to fall off, okay, but still elevated. But if you look here, right in this area here, I mean, you're talking 10 o'clock, you're talking all the way up to like 10:30, that we just had really good market internals. And if you look down here, this is the cumulative tick. And the cumulative tick was like 945, 950, that the cumulative tick went green in here. So I posted in Discord that, look, God, a couple of weeks ago, we were just looking at the dollar and rates, and that's all we were looking at. Well, the market kind of dislocated a little bit, still kind of following those. They're still important, but kind of getting back to normal internals. And this was really a nice setup here, and that enabled me to really press my longs and got me really, I mean, I know, I think I got a message from a couple people. It's like, Mike, you were really pressing 3 or 4 positions, early on. What were you looking at? And this is what I'm looking at. So, this is how you get an edge. Right? This is how you get that edge. So did anybody else recognize that stuff while you were trading today?
I watched the tick, but I didn't catch the Valdi, the thing you saw there. I mean, I keep that up as well. I mean, I saw it rising and going up. So I guess pretty much the same thing, but not in the fashion you were looking at it, where you press and press and press.
Yeah. So right here, right in here, this is like 950, 955. And, just to give you an example of where we are right in here, this is the 950, 955 area right here, right? So again, higher lows, still pressing, 955, 950, still pressing, dollar starting to fall off. You got rates starting to fall off. You got the VIX starting to fall off. So everything was kind of lining up. And this was such an easy recognition to really help keep pressing the bets on a lot of these stock trades. So, we had a nice stock trade in Unity, Square, all that stuff. And it also helped me take the short on Win, which I profited from too, because I noticed that Win, after being strong out of the gate, was really falling off while all the other stocks were pressing, internals were doing well. So anyhow, you can see this was a major point of inflection that we saw in the higher time frames. We saw it in the pre-market. Nice little look below. And again, going back to the 15-minute. So I took 2 trades in here. I took this trade up into here, and then I took it again and took it all the way up into this area. So 2 really good ES trades that, just played out well. And I just kind of wanted, this is really my trade of the day as far as what I was looking at. It was just such an easier trade on a day that we weren't expecting decent trade action. So, if you can get 12 points rate, in one trade, and then come back and get, almost 20 points on the second trade, within the next, hour, 30 minutes, that's pretty decent trading. And then of course you can see kind of what fell off there. So really decent trading that went kind of well for me. So Simon, walk me through your short that you were looking at in here as I got my charts up.
All right, I'll try my best. So a main level I was looking at was 39.78 half. And this was from yesterday's profile value area low. So
Gotcha.
it was kind of a play coming back into value and taking that downward. So the entry, let's see, my entry time was 10:35. So this was also, after 10:30, first hour initial balance is over. Also the failed auction, they took it up out of it. And then 10:35 I shorted. Let's see, I got filled 39.76.75.
10:35.
And I was watching. Yes. And I was watching the 5-minute on the entry there.
Okay.
I got in on the open of that candle. So kind of quick with it, but these failed auction plays tend to be working fast. So it would be the first candle
Right
after left. Yes.
Yeah, right there.
Yeah. So in there I shorted. Now my stop was.
Yeah, that's the question, because yesterday we had issues with stops. So what was your stop?
Right. I increased my stop to the left, and you could kind of see it's like a descending highs if you zoom out a little bit from the overnight session. So I was planning on a break of that, and also price to the left. So my actual stop was 39.84.25 or 39.84 quarter. So that would take out the trend line and also that previous price action on the left. So
Gotcha.
yeah, so my stop was in there. That would invalidate it. And my target was the bottom of initial balance. 2R, I was trying to take a base hit, 39.61.75. And that's another thing I wanted to ask you about. So I'm holding into it, and it's heavy on that 5-minute bar, very heavy. And I believe the 15-minute print's just as big.
Yes.
So that's one of the things. How do you hold through a breakdown?
Well,
that's
yeah, it's a good question. I mean, look, you obviously don't know, right, what's going to happen. Okay, it's easy in hindsight to look at this chart and say, oh, you should have held all the way down to here, right? But looking at this, and I've talked to you guys about these big bars before, right? Big bars tend to really continue. Like when you because to make a big bar, you typically got a lot of volume, and especially when you got a lot of volume kicking in, compared to what we saw. So there's heavy sellers, and that typically will keep one driving down. So when you see a big bar like this, what a lot of, unless it's a news driven event that's specific, you're typically you see another bar and it keeps on continuing down. Now with this one, this one was pretty decent action in that, you kind of came down here. And let me go back to the 2-minute chart. This is where if you break it down a little bit more, we can get a little bit better perspective on this. But if you're looking at the 2-minute bar here, okay, it's the same philosophy, right? So you got a big bar, you got a big bar. So there's 2 ways that traders typically will allow a trade to continue on this. The first way is, this is the obvious level. This was your target in here, okay? Well, your target was right here. For me, the initial balance was my obvious level of, okay, it breaks it, and then I will trail my stop to this level here. Does that make sense? Yeah. Now, what some traders will do is say, okay, I've taken this bar, I'm taking this bar, so the top of this bar now is my stop. Okay, and so they're guaranteed all this profit in here that you got, especially in a sell-off like this. So I know a lot of traders, professional traders, what they'll do is they'll go and say, okay, well, this 2-minute bar now is my stop. Okay, the top of this bar, and of course it never gets there. Or you could use, again, the initial balance level of the 15-minute, which was right here, which is a good one to kind of use too, if it's a level thing. But, the key is not to make it too tight, if you got big bars like this, and you got good volume, and you got increasing volume, you got decreasing volume, right, on the pop-up, and then you get more sellers hitting in. So this is a good sign here that this is going to be for continuation. And yeah, let this baby run. Let this baby run. Does that make sense to you, Simon?
Yes, I have a question. If that bar right before the base and then the drop, so if that let's say if that was the same size as the previous one, would you still use the high of that candle or something like 50%?
Or you use 50%, especially if you want to lock it. It depends what type of market, how aggressive you want to be. I'd probably use 50%, right? I'd probably use 50%. But, well, for me, actually, what I'm using, and I did not take this trade, but what I would be using, because I was off the desk by then, but what I would be using, I would have used this level, as my really kind of line in the sand. And if you go to the 5-minute, it kind of almost lines up better, right? You can kind of see, how this is why I look at so many different charts, as far as why I look at the 2, 5, 15, because the 5-minute, lines up with this perfectly. So if you're using the 5-minute in here, and then you now started this 5-minute bar, and this is a nice, a nice touch, and then go, it would have worked perfectly. Does that make sense?
Yeah. What I was thinking, and partly the reason is coming into the day, or coming into this week, I was focused on base hits, and also, like you mentioned, the day type. Not much expected of today, so that's partly why I didn't hold.
Yeah, and that's okay to do that, right? But also don't just use that as a crutch, though.
Right.
Okay. And I kind of did that this morning. Like, I was upset. I had some plays that I really could have let go a little further, and I was happy with my 1 point, my 2 points, stuff like that. So I kind of made that mistake myself today, because we both kind of came in with the same game plan, talked about it, Whippy day before, got positioning. It's a positioning day. And that's what this is. This is big players positioning into a big event. So what happens is it's okay to want to come in and say, okay, I'm going to take, it's the type of day that I just want to, I'm happy with my base hit, my 2 to 3 R. But if they're going to give you a 5 to 6 R, take it, right? And I can't yell at you for it, and I'm not going to say you were wrong, but because I did the same mistake. But don't, even though you have an expectation of the day it's going to be, if they're giving you the easy trade, take it.
Be fluid. Got to be fluid.
Got to be fluid. That's, you gotta, and it's the toughest part about trading, right? Because we come in with a mindset. And this, it took me the longest time to get over this, right? You come in with a bias and a mindset, but you got to know when to throw that bias out the window, right? And so I have such a hard time. Some of my worst trading days are days I thought I was so convinced the market's going to soar, and it pulls back and doesn't do what I thought, right? I'm so stuck and clinging to my bias that I'm not willing to be fluid and let it go. It's a perfect word, Simon. You got to be fluid. So, yeah, I mean, this just was a really good trade. You took the best trade of the day. So I'm happy about that. And you had a nice return. So you can't really get upset. We always say you want to take 60%, right? So 76, this trade went all the way down, and say you maybe would have got out, say 45. Okay, 76.45. That's what, 31 points? Right?
Yep, 31 points. So
Okay, so
Thank you.
19 points is an A++ trade. So how many points did you grab out of this play?
I got 15, so just shy.
Okay, right. So what you do is you divide 15. This is how I grade my trades. You 15 into 1860, which is what what we consider A+ setup, getting that portion or above, right? So you're at 81%. That's a B+. That's a B trade. It's good. That's how and that's a little insight in what I put into my journals as far as how I grade my trades. I look at the complete, I look at the complete, channel. And if I've gotten 60% or more of that channel, that's an A+ trade for me. If I get 80%, you got a good size, especially since it's been a tough market, and you had to experiment with your stops and stuff like that, and you didn't get some trades that you should have gotten. That's a good trade. So I don't want you to be upset about that trade, using hindsight, but hopefully this gives you a little bit of an edge. And all of you guys, this should give you a little bit of edge of, even though we have a bias, be fluid, like Simon says, and do, trade management, man. Let your trade run, right?
Definitely.
Let it breathe, especially when you got such a fine looking setup. And you can see how different it looks from the 5-minute to the 2-minute right in there, right? It's just crazy. I mean, so you can kind of see what the flow was. And then if you even went to the 15-minute on there, I mean, this was just beautiful. You have 1, 2, 3, 4 bars before you got your first green bar down here. So to me, 39.50 probably was an optimal area to get out.